All right. Hello, John. Welcome to our video today. We were just talking about the United Airlines HRA and RHA, Health Reimbursement Account and Retirement Health Account. Did I get those acronyms right?
I think so.
All right. This stuff can be confusing. It's a great benefit that United has right now. So you and I are going to break down for the United pilot when money goes into the HRA and subsequently, when does it go into the RHA? Okay. So we're going to work this out on a spreadsheet for our United pilots and try to make this simple. But I'll warn you, it's not simple. So hopefully it won't be confusing, but it's the getting towards the end of 2025. So what that means is the numbers will probably change for 2026 a little bit. The IRS adjusts these numbers a little bit each year. So we don't want that to confuse anybody, but just understand that to be true. So John, when does, you say it and I'm going to draw it out. When does money start to go into, for a United pilot, the health reimbursement account?
So if they are not contributing anything, it starts to go in after the company does their maximum amount. So that is 59.5
Yeah.
is how much the maximum the company can put in. So after that, the next 17% of 58,823.53, essentially the next $10,000 goes into your HRA.
Okay, got it. I'm going to draw that out. This scenario is where the pilot's not contributing at all, okay, at all to the 401k or PREP. And United, we're going to use this year, 2025 numbers, their NEC is 17%. So what you're seeing up here is that the deferral rate is 0 right here. Okay, so the scenario we have here, and we'll draw this out. United has put in 59.5 for this particular pilot. And that's the max they can put in the PRAP because the pilot is not putting anything in. So 350,000 is what's called the 401A17 limit. So basically United puts 350,000, takes your pay up to 350 and puts in 17%, which equals 59,500, right? And boom, the IRS says, hey, you cannot put any more than that. If the pilot's not doing anything, you can't put any more than that in the 401k PRAP. That's IRS rule. And that's this limit. So the money has to go somewhere else now, John, right? But it can go now into the HRA, right? Okay. So now the money here, the 10,000 comes from once you hit 350 and United has determined that once it goes all the way from 350,000 all the way up to
408, 823.53.
408, 823.53. That's a weird number, right? But basically, United wanted their pilots to get another $10,000 into the health reimbursement account. So where do we get that number? We subtract these two numbers, 408, 823 minus 350, multiply that by 17%, we get 10,000. Right, John?
Absolutely.
All right, that's a lot.
Yep.
Okay, so now this is the scenario where you, the United pilot, did not contribute anything to your PRAP. You got 59.5 in there at 350,000. IRS says timeout. You can't contribute any more to the 401k. You got to put it somewhere else. At other airlines, it just goes back into the pilot's paycheck possibly, or a market-based cash balance plan, which could happen at United depending on the votes and what happens there. But as of now, it's going to go into the HRA, the Health Reimbursement Account. John, then what happens if I, the United pilot, I don't use it?
If you don't use the money in your HRA twice a year, they take some of that and put it in your RHA, your retirement health account. And
Yeah,
that's invested differently for a longer time horizon, since that's for retirement or after you leave United, versus your HRA is invested more short term because they're expecting you to use it.
perfect. Yeah, that's important to know. One of the other questions, John, that we can address in a different time is like, well, how much should I allow because the pilot has some control. You could actually, we'll show the next scenario where you get up to $23,000 in your HRA, possibly rolling into your RHA. So how long do I let this go if I'm a United pilot? And the answer is, it depends. But I think the average person statistically is going to spend several hundred thousand on healthcare in retirement. So you could use it for long-term care. You could use it for all the expenses that come up, Medicare premiums. So you get a little bit of control here. You cannot contribute to your 401k. The spill is maxed out at 10,000 in this scenario. Not sure that that's a recommendation, but that is possible. So now let's go to the scenario, John, where now the United pilot maxes out their 401k contribution. All right. And so I'm going to put a deferral in here of, let's just say 15% to make sure that this makes it easier, right? Okay. So now you can see down here, we've got 24,200 going into the HRA, RHA. And by the way, I skipped, John, that United is putting in one per hour.
Yeah, $1 per flight hour they do a
$1
year.
per flight hour. Thank you. So now let's talk about this 13,000. How the heck does that get in there? So what happens is this pilot put in their maximum 23,500. Okay, we're not talking about catch-up contributions right now. Just think about the regular 23,500. So that means United Airlines can only put in, I say only, they can put in 46,500 because again, another IRS limitation is called the 415 excess. Well, we already talked about that a little bit. The 415 excess, 415 limit, I should say, of $70,000. Does this equal $70,000? Did my math right?
Yes.
Okay. So we got $70,000 there. The IRS says, timeout. United, you cannot put anything more in that pilot's 401k. The pilot can put in a catch-up contribution if they're 50 or over, but United cannot. The 70,000, they're done. That is another IRS limit. So what happens is United says, okay, we've hit 46.5 because you maxed out your portion. And that 46.5, John, we've got to do some reverse third grade math here that says, United, how much income did you make at the point where United hit 46.5? And that's about what, 273? I'll go ahead and do the exact math. We want to be exact here. 46.5 divided by 0.17, 273,529. Okay, it's actually 41 cents, but I'll leave that off. All right. So at this income level, this is important to know, if you're maxing out your 401k, your portion, the 23.5 for 20,000, the year 2025, then that income level where United hits their limit of 46.5 is about 273,529. So again, the IRS says, timeout, you can't put any more, United, you can't put any more in the PRAP. It has to go somewhere else. So that somewhere else now is the HRA. And that's where this 13,000 comes from. So what happens is the next dollars you make, say, keep making more money, John, and I go all the way up to 350. All right, this is where the math gets a little harder. All right, from my income from 273,529 to 350, United is still giving me 17% of that, and they're putting it into the HRA, right?
Yep.
All right, can you help me with my math here? 350,000 minus 273,529 times 17 equals what?
13,000.
There we go. So that's where that 13,000 comes from. And again, there's an IRS limit here. And so that's why it goes from, we call this the 415 excess. And then you hit this number IRS limit here, which is called the 401A17 limit. And then that just changes the name essentially. That's why there's 13 here and then 10,000 here. We've talked about how to get the 10,000 already. So that's where the 13 comes from. Once your income continues to go up, you'll get another 10,000, which we just talked about, into your HRA for a total here of $23,000 plus another 1,200 that you're getting from United for every hour. Thank you so much. Feel free to reach out to us at Leading Edge Financial Planning. Our website is leadingedgeplanning.com. Go check us out there. You can email me or John at charlie@leadingedgeplanning.com or jonathan@leadingedgeplanning.com. We'd love to hear from you. And if we can help out, let us know. Thank you.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for decisions based on such information, and it should not be relied on as such.